front and center on the back of the contraction that we've seen as far as the IIP data is concerned, even if you factor in the fact that it was Diwali that we can account for, and that could have led to some degree of what we're seeing show up in the IIP. But even factoring that in, it is a weak number.
Well, I think it has been affected by at least two one-off factors, right? One is what you mentioned, the Diwali, and the other, of course, is the Chennai flood. So one has to be careful about interpreting both the November number and the October number as well. So I think that the number that one should focus on perhaps is that, April to November, it's still substantially higher than last year. But there is mixed news there. For example, while consumer durables did well, capital goods actually saw a big decline. So in a sense, it's consistent with the message we had in the mid-year that the economy, while probably trending up, is showing mixed signals. Consumer sector is doing well, capital goods and investment less well. So this is kind of consistent with that pattern.
It is consistent with the message that the mid-year economic review held out, and you had very clearly articulated there that the indicators that we are seeing suggest that the recovery in the economy is mixed at this point in time. But does this give you concerns now about what we could expect as far as the manufacturing rebound is concerned, or the possibility of the rebound in the manufacturing sector? Because it does seem to suggest a loss of momentum there.
Well, actually, even if you look at the manufacturing number, April, November, is actually higher than last year. So, the trend is up. How robust that will be remains to be seen. But I think that also remember that the December indirect tax revenue numbers were also quite robust, which even without the revenue measures, the new measures, revenue growth was about 10.5%. So, so again, it's some good, some less good, but broadly very consistent with the mid-year, and nothing to suggest that it's collapsing or gone down significantly or whatever. So it's kind of as we had painted it in the mid-year economic analysis.
In the mid-year economic review, you were forced to scale down the government's own growth projections down to 7.5% from the earlier projection of 8 to 8.5%, which was the budget estimate. On the back of the data that we're now getting, do you believe that we could perhaps see a further downward revision?
Well, you see, the estimate of the mid-year analysis was between 7 and 7.5, and I don't think these numbers are going to change that projection or that forecast that we have. We'll have to wait for the third quarter GDP number to come in, which will be around, which will be at the end of January, and then we'll get a better picture for what the number for the year as a whole is going to be.
How concerned would you be about the CPI inflation, which has picked up to about 5.6% year on year, largely on account of food inflation?
Yeah, I think there too, you can see that, core inflation is at about 4.5, 4.6, 4.7 in that range. It's been trading in that range. And again, the big jump in pulses prices as well accounted for a big part of the increase in the food price and in the CPI as well. Remember that with prices, there is some good news in the months ahead as well, because oil prices have come down even further, and that will be reflected in the inflation numbers in the months ahead. So there is some, looking ahead, some likely good news also on CPI. So, again, broadly coming down in line with our expectation and with the RBI's target. Some further good news down the road because of the oil price. So, so on the whole, not too bad.
So you believe that the momentum, of course, CPI continues to remain soft. Do you believe that there is still room then for at least another rate cut by the Reserve Bank of India, whether it happens, in the April policy or not? The timing is a separate matter, but do you believe that there is still room for at least another rate cut by the Reserve Bank?
Well, let's see how the inflation evolves going forward. I mean, all this will be data driven, of course, as the RBI has made clear. And if the oil price effect works through, maybe there's room, but there are also other factors which have to be kept in mind. So let's wait and watch.
A quick word on the sort of rural distress that we're seeing and how that's likely to continue to weigh on growth. I understand that a new crop insurance scheme is going to be taken up by Cabinet. I don't expect you to take us through the details of that, but what is the sense that you're getting on account of the rural distress and the kind of impact it will continue to have as far as growth is concerned?
Yeah, I mean, I think this year, the fourth successive drought, Rabi plantings are down, moisture levels are down, temperatures are up. So that will invariably affect agricultural GDP growth and rural demand. So I think that we've kind of factored that into account. But I think in terms of, the government is committed to responding to that with all the resources that it can. And so, as I've said before, agriculture is going to be a big part of the discussions leading up to the budget as well. So the government is fully aware of the stress in the farm sector from all that's happening, and is committed to really increasing the resources devoted to this sector.
But on balance, Arvind Subramaniam, you put out a fairly mixed picture in the mid-year economic review. Do you feel more concerned about the headwinds, whether it's fiscal or otherwise? The external challenges, of course, also continue to look extremely gloomy with what's happening in China today. Global markets continue to be extremely volatile. Have the headwinds gone up since you presented the economic review?
Well, I mean, not significantly. We're all watching what China is doing. I think that's something we have to watch, and we'll have to respond appropriately. So for the moment, I think broadly the messages in the mid-year stand. Always have to be vigilant to everything that evolves in the external environment. So thank you very much. Yeah?
All right, Arvind Subramaniam, the Chief Economic Advisor there. Appreciate you joining us here, taking us through what the government believes is an IIP data that is along expected lines. Not much has changed from the time that the government presented its mid-year economic review. Don't believe that they will be forced to scale down growth estimates even further. Remember, they've already scaled them down to between 7 to 7.5%. So that is the view at this point in time coming in from the government. But it's back to